Well, I am in an incredibly privileged position, really, to be able to speak to some of the most influential innovators, authors, practitioners in the world of product design, marketing, innovation, business, all kinds of different areas. And really, today is no exception. In fact, I'd say today is more of a highlight than anything for me. It's been a great honor. It will be a great honor. And I'm thrilled to welcome author, co founder, and general partner at Character VC to the show, John Zeratsky. John, welcome.
Thank you, Spencer. I'm excited to be here and looking forward to the conversation.
And so am I hugely. John, I've been following your work for at least 7 years, I guess, since the book Sprint really came out,
Yeah,
maybe a little bit before, even when there was kind of the early posts from Google Ventures around that as well. I'm pretty familiar with a lot of your work. I won't say I've been stalking you, but I've been following along. But if anyone that's maybe not familiar with Sprint or with Character or you yourself, what do people need to know in order to understand who you are and why you do what you do?
sure. Maybe the best place to start is how I grew up, which was as a kid in a very small town in rural Wisconsin, and loved to take things apart and put them back together and make things from scratch. And my family has a manufacturing business, and so the upshot of those circumstances was that I thought I would go to university and study engineering, right? Sort of the traditional path that you might take for somebody interested in tinkering and making. But I really didn't like the way that it was taught when I got there, sitting through boring calculus classes and physics and rote memorization didn't really suit my brain. And so I was very lucky to find a professor and her graduate student who were doing some of the earliest work on blogging and the democratization of publishing on the web. This was in the early 2000s. And I just kind of grabbed onto them, and I didn't leave for 3 years. Spent a lot of time in their office, and that led me to get a degree in journalism. So I mention all that just to sort of I think set the stage for what has been sort of an unusual path. I then spent about 10 years primarily as an individual contributor designer, working with technology companies on designing and building new products and bringing those to market. Initially at a startup in Chicago. So I was one of the first employees at this company called FeedBurner that was acquired by Google a couple of years later. Then worked on a number of 0 to 1 projects inside of Google, including the YouTube channels platform. So I was the product design lead for YouTube channels, which was really interesting, just thinking about how do you create a whole new product architecture and all the UX around a new product experience for a new way of engaging with content. And then
Thank you for that, by the way. Thank you for that.
yeah,
Without that, I guess we would be struggling here, right?
right. Yeah. Although we may have a bit more free time. But then in 2011, I had the really unique opportunity to join Google Ventures, and GV is at this point now, one of the venture capital firms that's funded by Alphabet. And GV was just a couple of years old at that time, and they had this really interesting idea that they would have Google experts, designers, engineers, product managers, marketers, who were available to the companies that they were investing in, not just to sit down for an hour and have an office hours session or something, but truly to have these people come inside the startup and help them, help them succeed, improve their chances of success. And I was one of the first people hired into that role. So bringing my background as a designer, having worked at a startup and been through the acquisition and 0 to 1 projects inside of Google, I had a good background for that. And so the first year or so in that role, it was very ad hoc. I would go into a company we had invested in, something like Foundation Medicine, which made a new type of cancer diagnostic using some interesting genomic technology. Say, okay, what do you guys need to figure out? What are the big challenges that you're facing as a business where I can help? So of course, scientific things, I'm not going to help there, not going to help with a lot of things, but in their particular case, they had this big challenge around how to communicate the findings from this new kind of report. So I would dig in. I would work with the team. I would understand, typical design stuff. Who's the customer, the audience.
Right,
What are
right,
the
right, right.
challenges? What are the key things we need to get across? And just sort of do that work as kind of a designer on loan to that company. Of course, that approach doesn't really scale because there's only so many of. At this point, we had hired a couple more people on my team, but we can deploy capital as investors a lot faster than we can send designers and engineers into these companies to help them. So it was around that time that we started talking with Jake Knapp, who had been running design sprints. He had created this process at Google, running sprints with internal teams there. And we thought this could be a really good model for doing design work in a way that was very impactful. So it was really focused on the most important questions that these businesses faced, but also very scalable because it was a finite time commitment. We knew we could go into a company, move the needle on whatever they cared about. And then the next week we could go to a different company, and the next week a company after that. So we recruited Jake to join our team at GV. This was in 2012. And we immediately grabbed onto the design sprint as our engagement model for supporting the portfolio companies, for helping them answer the big questions that they had and really de-risk their businesses, de-risk their products, de-risk how they were going to market with those products. And so we got a chance to work with some amazing companies. We worked with Slack, One Medical Group, 23andMe, a lot of really successful companies that were also really successful investments for Google Ventures.
Mm-hmm.
And we saw this opportunity to make Sprint, the design sprint method, not just a nice thing that we did after we invested, but really a part of the brand of GV and why people would want to raise money from us. So that led to writing the book, to putting out all of the content, to speaking at conferences and so on. That sort of insight of, hey, this is a thing that is not just helpful after you invest, but helpful even before you invest. That little flash of insight kind of stuck with me. And so fast forward a couple of years, Jake and I had both left GV. We had been doing a bunch of other projects. We got interested in starting something new together. We had teamed up with a friend and who's now our business partner, who had a background in venture capital investing, and we became interested in crafting an entire VC strategy around Sprint. Again, not just this nice value add after the fact, but really the source of competitive advantage for every single thing that we do as investors. And so that became really the foundation of Character, which is the VC firm that I started with Jake and Eli 3 years ago. We've been investing in seed stage software companies for the past 3 years. We've invested in 32 as of now. And we've run design sprints with every single one of them. We've developed
Amazing.
new types of sprints to help them de-risk their business at whatever stage they're at, whatever sort of pivotal moment that they're at in the company. And it's been really fun. It's been really interesting to be able to take this thing that we came up with almost accidentally a long time ago and evolve it into kind of the centerpiece of how we work with startups.
Wow. I mean, what a journey. And I guess every journey is unique. And that's why I love to start with this question, because you get to really appreciate that whilst we might individually think that we've had a different journey to everyone else, the reality is that everyone's had weird and strange journeys going backwards and forwards and in circles, and ultimately just falling in love with the things that you fall in love with. And I should say, I didn't realize this about you, actually. I don't know how I missed this, but our very early stage was very similar. I was always going to be a mechanical engineer because I was good at Lego. I broke things apart. I like to fix things and try to fix things, always with a couple of screws left over. My nan, actually, my grandma said, you're going to be the engineer of the family. So that's the route I was going to take. I went and, I went to do start my engineering degree, realized what it was only then, and realized actually there's something else I got to be doing, and brought in an element of creativity. So my degree was in music systems engineering. So there was still elements of engineering, so computer and electronic engineering, but very much focused on music. And and then I had this opportunity to bring in the creative side as well as the kind of scientific and engineering background as well, which is amazing. So there you
Yeah.
go, similar journey up to
Yeah.
that point.
Very cool.
Not so much beyond, but I think perhaps we've gone full circle and kind of reaching a point where we're back similar again.
Yeah. Yeah.
To dig into this is so much about what you talked about there, but what I would love to do is to dig in, I guess, towards the end, and maybe we'll kind of go backwards back towards sprint. But I'd really like to start the conversation of the kind of venture capital world.
Mhm.
As you know, I've done videos and we've talked about this previously. In fact, for anyone listening, I want to highlight this, that John, in our first conversation, you posed a question to me, which was essentially, I want to do a podcast with you, but should we make it something more interesting? Let's not just have a conversation and just be a bog standard interview that we see so many times. What can we bring that's more interesting? And I've been doing these videos around business model breakdowns, about how to kind of show the story of different businesses, bits and businesses that I've been inspired by over the last few years, to kind of tell their story using the business model canvas. So I will be doing that, but I'll be doing it via interviewing you and then kind of circling back to kind of bring in some of the visuals. But let's start off with the business model, if you like, of venture capital. So for anyone, and I'm sure there's many people that are listening that are kind of familiar with the startup world and the venture world, but for anyone that's not familiar with that, what's the kind of fundamental business model of VC? And then I guess what we'd really like to do is kind of see what character and what you're doing to innovate within that model.
There are three important participants in the venture capital model, and it's helpful to think about each of these because they each have slightly different incentives. There's the startup founder, who is, for all intents and purposes, the customer of the venture capital business. They need money, they need capital to start their business because they are working on something that will require an unusually large team or long amount of time in order to prove the validity of the business. This is very different than starting a cafe or a consulting firm, or even a shop on Etsy where you're selling some good that you make, where you can scale the level of investment with the progress made in the business. You sell one thing, your costs are for one thing, then you sell 10, and then you sell 100, you sell 1,000. The characteristics of a venture capital backed startup are that they're going to need months, they're going to need 3, 5, 10 people to get to the point where they can sell one thing. So that's the starting point. Is you have founders, they're starting these businesses that have these unique capital needs, and they are the product that they're buying is venture capital money. And the way that they're paying for that product is by exchanging a percentage of ownership of their business. They're giving up a little bit of equity in exchange for that cash. Then we have the venture capitalist, or the VC, or sometimes called the GP, which is short for general partner. This is essentially the manager of the venture capital firm, or perhaps an individual at that firm who is empowered to make investment decisions. And what they're trying to do is they're trying to construct a portfolio of ownership positions in startups that they believe are going to turn into large, successful companies. And just like any investor, they're balancing risk and reward. They're looking for companies that are risky enough that if they turn out to be very successful, they're going to be very rewarding. They don't want safe bets. They need diversification. Again, just like any investor, they can't have all of their money riding on one company or even 10 companies. So they're usually looking for a somewhat diversified portfolio. And then, of course, they want to do everything that they can do to help those startups succeed. So it's not just about making smart investing decisions, it's about helping those companies succeed. VCs generally don't invest their own money. They may invest a small percentage of their own money, but the number of dollars needed to have a VC fund is far beyond the wealth of any one individual for the most part. And so VCs essentially have their own investors, which are called limited partners, or LPs. These can be individual, high net worth individuals. These can be family offices. These can be large institutions, pension funds, endowments, foundations, who want to invest in venture capital as a piece of their overall portfolio of investments. And it's a very specific piece. It's a piece that is, again, very risky, but potentially very rewarding. So an LP is not going to have all their money in venture capital, just as a venture capitalist is not going to have all their money in one startup. So there's kind of this cascading of risk and portfolio construction. The business model of venture capital is that the GP, the venture capitalist, gets paid a management fee. So they get paid a percentage of the money that they're investing to do their job. Just as, again, any fund manager, you invest in a mutual fund or an ETF, the manager of that fund is getting some percentage of the assets as their salary. And then they have an incentive they have incentive pay, essentially. The VC is getting paid a percentage of any money that they make on those investments beyond paying back the capital to the LPs. So, if we invest in a company that is, we invest $1 million and it, that gets us 10% ownership in that company. So let's say it's valued at $10 million. That business goes on to sell for $100 million. We get back 10 million. So we subtract our sort of initial investment, and the net that we've made is 9 million. So the first thing we do is we return that 1 million to all the investors. And then the 9 million, we keep a percentage of that. So we keep a small percentage of that as sort of our incentive payment for having made a successful investment. But the rest of it, the bulk of it, the vast majority of the money goes back to the original investors, the limited partners. So that's sort of the business model in a nutshell.
Amazing. Thank you. I think that was probably one of the best explanations, because what I think you did was brought it to just made it in the realms of most people's view of the world. So I could relate to that from not just from a venture capital perspective, but also from a general business perspective. You understand multiple customers or stakeholders, if you like, and whatever else. So thank you. That was amazing. And automatically by doing that, it's kind of got me thinking, well, one of the big value adds, the value proposition, the thing that you bring as a venture capitalist isn't just the money. It is something, there's money plus something else. And I think this is where it kind of gets interesting for me around what you're doing with Character, because as I understand, a lot of VC organizations, they might bring talent, as you kind of described with that early stage of GV. You might have opportunity to work with data scientists or developers or marketers or salespeople. It might have opportunity to network for future funds, network for future, sales opportunities and whatever else, bringing in the VC's network, but also for additional support. And I think what you do is you add value in a slightly different way. And it seems to me, that you're focusing heavily on the kind of collaboration as the advantage. And what I mean by that is the collaboration around facilitation of working better together using the sprint method. Have I kind of got that right broadly? Is there anything else that you're focusing on? I really kind of basically want to get to this point of how do we integrate the design sprint world that you came from and the venture capital world and kind of innovate around that world?
Yeah. So the first thing I'll say is that we're not attempting to innovate on the business model of VC. We get paid in the same ways that every other VC gets paid. And that's important because we are also, just as I described the founders sort of buying this product of venture capital money, the limited partners are also sort of buying a product that we're selling, which is our ability to produce returns. And so we want to have a unique strategy for how we are successful as investors. We don't want to have some crazy new business model that they struggle to understand. So the business model itself is actually the same, But where we're really focused on trying to be different and better is on the strategy of how we are successful as investors. To be a successful VC, there's essentially four things that you need to be really good at. The first is finding opportunities. So finding companies to invest in. This is very interesting because VC is perhaps the only asset class where there are no records of all the companies. There are all the opportunities. There is no list of all the companies that you can invest in. The public markets are the easiest, right? There's a list of all the companies on the stock exchange. Even if you look at things like private equity, where there's only so many companies that fit a certain, level of revenue or profit each year that you might want to buy. Real estate, there's government records of real estate that exists. Most, if not all,
historic records as well, right? There's data for all of those, so you can see performance over time, map that against different changes in the economy or circumstance and whatever else, and you can get a pretty clear picture on what's going to happen. But of course, with this world, completely different.
Yeah, there's nowhere you can go to find a list of all the companies, and so you need to have a strategy. You need to have an edge, a way of finding companies. So that's the first thing, is finding opportunities. The second is deciding which ones to invest in. This is the part that I think a lot of people focus on is, you've got to be smart. You got to make smart investments. You have to be smart about deciding which companies to invest in. And that's, I think, relatively straightforward, but I'll come back to it. The third thing is earning access to those opportunities. So this is another one of those weird things about VC compared to some other types of investing, is that, if I found you as a founder of a startup and I said, Spencer, the company you're building is amazing. I would like to invest in your company at, these terms. You have every right and ability to say, no, thank you. I already raised money from these other investors, or actually, I don't like the terms. I don't like what you're proposing. This is very different
Highly
from
unlikely, by the way, but
thank you for that. But it's very different from something like the public markets, where there are these exchanges that exist and the price of a stock is X. And if I pay X, I get the stock. There's nobody who's going to tell me no. And so you need to have a way of earning that access. And then finally, you need to be able to support those companies. And it really comes down to improving their odds of success, sort of taking them from whatever probability they had of succeeding when you made the investment, and hopefully increasing that probability a little bit. So find the opportunities, decide which ones to invest in, earn access to make those investments, and then support those companies to improve their odds of success. And so the way that we think about it is that there's something in sprint, there's something from the design sprint process and the sprint method that helps us be really great at all of those things. We think uniquely great. We think it gives us a really, really clear and important edge. When it comes to finding companies, perhaps it's self-explanatory, but we have the book that we've written that sold really well. We have the videos that exist. We have the articles. We have the hundreds and hundreds of presentations that we've given at conferences and at universities. We have our newsletters that have tens of thousands of people subscribe to them. And so we have people who know about us and reach out to us when they want to raise money. But we also have this really nice sort of touchstone when we reach out to somebody that we don't already know, and then they say, "Oh, you're the Sprint guys. You came from GV. I know about your story." And we also have all of the people who have been in all the sprints that we've run over those many years. So at this point, I think we've done 200 sprints, something like that, with startups over the last decade. And so if you just assume for simple math, you assume there's 10 people in each of those sprints, there's 2,500 people who are either startup founders or early startup employees. So sprint gives us this really ability to find these opportunities. It gives us we think, a unique ability to decide, because we've seen a lot of these startup stories, both the successes and the failures, really up close in a very tangible way. We've actually had our hands on, let's make a thing and let's test it and let's see what happens. So it's given us really good intuition about what is likely to work. The other really interesting thing is that after we make an investment, let's say we start with a small investment in a company, we run sprints with them and we learn a lot about how they're doing. We get to see, again, up close, how does the team operate? How are customers reacting to what they're doing? And so when we want to make additional investments, our ability to decide whether to make those additional investments is very well informed by what we've learned from running those sprints. So it gives us a unique ability to decide. It gives us a unique ability to earn access. And this, again, is fairly simple, but hey, we're going to work with your team. We're going to run sprints hand in hand with your team to help you find product market fit, which is the most important thing to any early stage startup. Until you found product market fit, nothing else matters. And we're going to work hands-on with you using the sprint framework that you've seen work at hundreds of other successful companies. We're going to do that with you. That is a very unique pitch that most investors can't make and don't make. And so it does help us earn access to invest when we decide we want to make an investment. And then finally, after we invest, Sprint helps us support those companies. And I think this was the original sort of application of the design sprint at Google Ventures and the most obvious application. But it's basically, hey, if we can help you figure out in a couple of weeks instead of a couple of months whether you're on the right track, we can improve the cycle speed at which you operate as a founder. Then we're going to help you make more progress in less time. We're going to increase the chances that you find product market fit before you run out of money. And that is truly a game changer for startups at the very early stage. So sort of a long answer, but I wanted to lay out that framework of those 4 things that a VC needs to know how to do and to be really good at in order to sort of explain how the sprint method is tied into our strategy for each of those 4.
Thank you for that. Long explanations are very welcome on this show, so I really do appreciate that. And actually, I think what you've just described there, whilst it's not innovating within the revenue model, certainly in the kind of business models as we take it, there's definitely elements of, if I were to look at the business model canvas here, there's definitely elements where you're doing a lot of work. So the channels, for example, the channels that you're looking to get to find startups, that's something unique that you have, and the unique difference that you've had. Your relationships that you're building with these startups, that is very different as well. And we'll perhaps jump into that because I see the relationship that you would develop as a part of the sprint method with each of these startups as being vastly different to the way that most VCs would operate and the kind of relationship that they would have. You have different partnerships, your key resources that you have, and the activities that you do are very different as well. So there's a lot of those elements of the business model canvas that you've just described with those 4 different elements of what makes a great VC that are unique to yourselves, which is really exciting. And I definitely want to dig into some of these a little bit more. I was particularly interested to hear about that kind of the point 3 there, the earning access piece. It's almost the sell, I guess, right? In other language, you would kind of, you're selling yourselves as a VC to these founders and try to figure out what that unique value proposition is so important. And of course, with that, whether you want to call it a funnel or whatever it is, that big audience that you already have that are quite captivated and clearly quite energized by what you brought to the table, it feels like you've got, you've earned a lot of that already. You've shown your credentials. You've worked with some of the biggest household names now by bringing Sprint to life with them, by going through those processes to make them better organizations. So it feels like that's just a completely unique thing as well. That means that you can compete in a heavily competitive landscape like venture capital, but also there's an element of protection and a moat being created because of your unique thing that you're bringing to the landscape as well.
Yeah, and there's a flywheel effect where each sprint that we run with a successful company not only gives us a little bit better intuition, but it gives us another case study. It gives us another proof point of our strategy, which then we can share publicly, or a founder can mention to another founder that they know, which helps our ability to do all those things that I talked about. It helps us find new opportunities. It helps us make a smarter decision. It helps us earn access. So yeah, it fits together quite nicely. And, I also wanted to mention that when we were starting Character, one of the things we did, of course, was look at the competition. We looked at the market, and thought about how we would be different. And if you saw some of our early pitch decks for us pitching ourselves to LPs, it's almost embarrassing how undifferentiated we were from the other seed funds that exist. And there are a lot of seed funds. There are thousands of seed funds in the world. But when you look at them, if you were to go, if you had all their websites open in a browser and different tabs, and you flip through the tabs, you'd start to see a lot of commonalities. You'd start to see even a lot of the words repeated over and over. You could almost copy and paste the text from one website to the next. And so I think recognizing that and starting to hear the same questions from LPs about why should I invest with you? Like, what's different about your fund? It really helped us strengthen the pitch that we were making to LPs, which in turn helped us strengthen the pitch that we're making to founders. And so this has in turn sort of, been this full circle thing where now we really help the startups that we invest in. We really help them focus on differentiation, help them figure out what is truly unique about what you're building and you're bringing to the market. And the insight around why that's so important came from the insights that we learned bringing our own product to market, our own product as a venture capital firm. So it's been really, really fascinating to see how the same things apply sort of no matter what perspective you look at it from.
I love that. I love that so much, because often I've always wanted to practice what I preach. I wanted to, do the things that I'm telling other people to do, not just from being involved on their projects, but from my work, for me to really understand these processes, really understand how to bring value and to get that uniqueness coming through. And so it's quite, I feel that hearing that from you gives me a lot of reassurance that, there's a lot of failure, even when we think we know how to do these things, even though, we think we've got a good idea of where we're going, building something, testing, learning, that constant voyage of discovery for learning is only the only way really to get you where you want to get to ultimately as well. So thank you for that. I'm interested, John, if we can, to kind of pick it apart underneath, like if I was to, pull the bonnet up, so to speak, and kind of really look at the inner workings of what this looks like. Can you talk to me about what it looks like in practice? I'm also, we've talked a little bit about sprint method. I've got a broad view about what that might look like, but I know that you've talked previously about different styles of design sprints or sprint workshops. Mm-hmm. So I'd love to hear about anything there that you're doing as well. Of course, anything that you're able to share. I'm sure there are things that you're not quite ready to share it yet, but all that kind of stuff as well. So maybe when in the process would you be looking to do sprints with organizations? What types of sprints might you be doing at different stages as well? Bring that to life for us.
I think the most interesting way to answer your questions might be with a story, with a case study, an example, a concrete example. And I'll use the example of one of the companies that participated in Character Labs, because Character Labs ties together everything that I've been talking about in a much tighter way than sort of our quote unquote normal investments. And perhaps this is too much detail, but in our own efforts to build a diversified portfolio, we make different kinds of investments at different stages of a company. So we have some companies that are a bit further along, they're slightly less risky. We have some companies that are at that traditional seed stage where maybe they just have their first version of the product in the market. And so we have some clarity about what they're doing and how things are going. But we also have investments through Character Labs that are very, very early. In fact, in most cases, those founders haven't even incorporated their business. They haven't started their business really. They have an intuition. They have an insight about what they might do, but they haven't really done it. They haven't really proven whether it's going to work. So Character Labs is our sprint program for pre-seed founders. And I'll give you the example of a company called Digest. So Digest is building AI tutors for high school and university students. So there's a lot of debate and disagreement about the use of ChatGPT in schools. Certainly here in the US, I assume,
Yeah.
in the UK and around the world as well. But at the same time, there's a lot of value. It'd be very valuable to be able, as a student, to have this AI learning companion to say, "Hey, I don't quite understand this. Will you help me?" Or to be tested or quizzed by the AI in a way that's perfectly suited to the level of understanding that you're at. So Digest is making a version. This is just sort of the simple way to think about it: a version of ChatGPT that is custom designed and engineered and built for schools for use in an educational environment. The way that Character Labs works is that the companies apply to participate. And so the founder of Digest, his name is QP. He had been following Sprint. He actually just sent me a couple of weeks ago a photo of his original copy of Sprint from 2016 when it came out, and he showed me, and it was all marked up, and it was he found it in his bookshelf. He was going through some things, so he knew about Sprint. He'd been following the journey of Character, so he applies. So step one, that was how we found the opportunity, was because of Sprint. So we get a lot of applications for Character Labs. So we go through them all. We have some different steps that we go through to help us evaluate which of these do we think are most likely to be successful companies. What can we learn about how the founders operate? Are they hypothesis driven? Are they iterative? Are they focused on, like you said, getting in those rapid and tight loops of learning from their customers? The market that they're in, is it a big market? Is it a market where people are apt to try new things? What is the status quo in that market? Is it sort of stagnant? Is there an opportunity to come in and be disruptive in some valuable way? A bunch of things like that. So we decide, and Digest is one of the companies that comes in. So we make a small investment, and we do this for all the Character Labs companies. We make a small investment, only $100,000. So it's very, very small. But that's because these companies are very risky. Like I said, most of them are incorporating for this program. They haven't really done or proven anything. So we make this small investment. And then in Character Labs, the companies, including Digest, they go through a sequence of 4 back-to-back sprints. So it's 4 weeks, and it is one sprint after another for 4 weeks. Again, we're really trying to accelerate that process of learning and accelerate their progress toward product market fit. The first week is a new type of sprint called a foundation sprint. We created this about a year ago, and it was based on a bunch of work that Jake had been doing around what teams need to figure out when they're first getting started, and specifically how to translate their intuition and their insights that they have as founders into a coherent strategy, right? So, and this is one of the things that the business model of Canvas helps with as well. It's sort of like, I have all these things in my head about, well, I think there's an opportunity in the market here, and I think I could do it this way, and this could be unique and valuable. But it's kind of taking that next step into, well, what would that really look like? And then enabling you to test your strategy with real customers and update your strategy with what you learn. So the first week is a foundation sprint, and then 3 weeks of design sprints. So that's the 5-day design sprint that we used with so many companies at Google Ventures that we wrote the book about. So starting with a specific moment in the customer journey, coming up with solutions, rapidly prototyping specific, what we're going to show to customers in that moment, and then testing it with real customers in order to answer the questions that we have about our business. So Digest went through that sequence of sprints with all the other companies, and a lot of their questions were really around what's the ideal shape of this product. They had this high level notion of, we think there's a way for AI to help people learn better, to help them study and make more progress at school. But this was before ChatGPT had come out. This was last summer when they participated in Character Labs. So the world didn't really have this kind of crisp understanding of what it looked like to engage with artificial intelligence. And so most of what they experimented with in the sprints was different ways of of presenting the AI to students, packaging it, positioning it, what the UI would be for that AI. What they eventually landed on was essentially a chatbot. And again, this was before ChatGPT, but they ended up building this chatbot that they distributed as sort of their prototype, their MVP, through WhatsApp. So they didn't have to build a whole app. They didn't have to be in the app store and have this marketing funnel and all these things. It was essentially a WhatsApp bot. So you would interact with it through WhatsApp, and then you could invite people to it. You could sort of share it with people. So it had this natural kind of viral growth mechanism built into it. So this began to work really, really well. So we had helped the company through, running those design sprints. We had sort of helped them, de-risk what they're doing, figure out what they're doing, see if they're on the right track, and make a lot of progress toward product market fit. And then sort of the final piece of the story, at least for now, is that a couple of months after the Character Labs program ended, Digest participated in TechCrunch Disrupt, which is this big tech conference, this big startup conference. And they presented on stage. They were featured as part of, I forget what it's called, the Startup Battlefield, I think, which is sort of a competition, if you will. And this led to a lot of interest from other investors, people who wanted to invest in their next round of funding. And so they ended up getting a term sheet from a very reputable ed tech investor, firm that invests in educational technology companies. And because we had learned so much about Digest, about the team, about the possibility, the promise of what they were building, when they got that term sheet from that next investor, we were perfectly positioned to invest more money and to make a really, we think, hopefully insightful decision about continuing to invest. And so we were able to actually increase our ownership, to invest significantly more money, to sort of upgrade our, that nascent company Digest from Character Labs to one of our core positions in the portfolio. So anyway, that's just a story that I think demonstrates how a lot of these things fit together in, kind of a concrete way, from how do we meet the company to how do we earn access, to how do we support them, to how do we ultimately decide, kind of leverage what we've learned through that experience of working with them in sprints to make an additional investment and continue to increase our ownership in that company.
Wow, thank you. Again, you brought those 4 points so vividly to life with that story. Again, I think, again, I'm gonna talk a little bit about improving the odds there through that design sprint method, those approaches that would have just been an enormous catalyst for that very early stage idea, really, to kind of figure out, I guess, that early stage desirability angle in terms of the the three buckets, if you like, of hypothesis testing, but earning access as well. There's a good chance that they would have been oversubscribed for that round, but because you've built up that bigger relationship, you've got an opportunity to kind of increase that share and ownership of the organization, which is amazing. And actually, as you were talking there, there's so much I would love to dig into on their story. Even I'm a former educator. I used to have a real challenge in my high schools that I taught in around things like Wikipedia and using the internet more broadly. Yeah. So I understand the challenges now of teachers wanting or education professionals wanting to embrace AI and all of the capabilities that can bring. I actually built way back in, 2008. It's what I called, you call this the kind of chat GPT for education. I called my thing the Facebook for education. Essentially, we'd now call it social learning platforms or whatever, but I built that for a school that I used to work in. And it was incredible seeing the amount of participation that people were having, but yet still the school boards were fearful and telling me to close it down until I showed them what it could do. So I think that's a big part of this, is really understanding what the capabilities are and being able to de-risk a lot of that stuff in order to maximize the opportunity for young people. So that sounds amazing. I could dwell on that for a very long period of time, but I'm going to transition us a little bit more. Thank you so much for that in-depth kind of view on how it works in practice. I want to dig into a little bit, because you talked a little bit there about AI, and seems like I can't have a podcast at the moment without talking a bit more about AI. But I believe that maybe it's not your full thesis, but definitely for Character Labs, and I think many of the other areas of your investment, you're focusing on AI. Why is that? Beyond the obvious, it's hot. You know, the discussions about whether it's a fad, whether it's overblown, whether it's hype, whether it's going to take all our jobs, whether it's not. All of these things are kind of circulating at the moment. But you, as a VC, have taken a big bet, if you like, a big step forward to say this is going to be a big focus for us. I'm kind of interested to know how you view that world and why you made that decision particularly.
Our investment focus has always been at the intersection of technical depth or sort of technical edge, and behavioral insight about a particular type of customer or industry. And this, this is maybe sounds a little obvious, but it's somewhat unique, where I think there's a lot of investors who want to focus only on the technical side of things. This is the classic, move fast and break things. You sort of have these 23-year-old hackers who, don't really know anything about the industry that they're going into, but that's a good thing, right? They're going to sort of go in and blow things up and disrupt things and let the pieces fall where they may. On the other end of the spectrum, you have an archetype of founder and an investor who supports these founders that are very experienced, multi-decade executives in a particular industry who come out and say, I'm going to bring my relationships and everything that I know. Oh, and all I need is a tech team. All I need is a dev team to help me bring this to life. We've seen again and again, and starting at Google Ventures, we've seen that if you can bring these worlds together, that really amazing things are possible. A great example of this from GV is Flatiron Health, and Flatiron is a cancer oncology or a cancer software company or cancer data company that was purchased by Roche for close to $2 billion. So it was a very good investment. It was a very important company in the world of oncology, and it's a bit flippant, but I sometimes joke that like the big insight that they had was, let's put oncologists and software engineers in the same room and just let them work together, and these are two worlds that typically don't intersect and they don't collaborate. But we see that with our investment in Phaedra, which is a AI industrial controls startup, and half the team is from Google DeepMind, and they're these world-class AI researchers and engineers, and the other half of the team comes from the industrial controls world. They come from Raytheon and Trane and Johnson Controls. And you put these people together, and sort of great things are possible. And so that's always been our investment focus. But what has happened over the last couple of years is that the really sort of smart and ambitious technical people, the ones who kind of have that, that technical depth and that edge, they've moved into AI. They've become very, very interested in artificial intelligence. And so what we've seen is that the behavioral side of it is as important as ever, if not more important. But you're seeing this incredible blooming of what's possible from a technical perspective. And so the source of value from that technical edge and that technical depth has exploded. And then in the meantime, the sort of customer side of things, the industry side of things is kind of risky. It's kind of, like it might be kind of scary. You might have an industry like drug development or material science or, industrial facilities, like I mentioned with Phaedra, where the customers are saying, hey, we've been doing this the same way for decades, and we're pretty good at it. Like, why should we trust this AI developed by these, Silicon Valley people to change the way that we do business? And so there's a really, really important role there for design. And we use sprints to help to de-risk that side of the business and say, how do we make this technology understandable? How do we make it trustworthy? How do we make it make sense for those customers? There's a great presentation from the chief decision scientist at Google, and her name is Cassie, and I saw a presentation from her a few weeks ago, and she said that ChatGPT wasn't really an AI revolution because the technology behind ChatGPT had been around for years, literally for years. It was a design revolution, because for the first
Mm.
time, a team took this technology and they got the design right. They put it in a form that allowed any, average quote unquote person to look at it and say, I get it. I understand the power of this technology. And that's exactly what we're seeing with the companies that we invest in. It's not, any average person, but it's allowing an industrial plant operator to say, oh, I get it. I understand what AI is. Or allowing a medicinal chemist who's developing new drugs to say, aha, I get it. Like, this isn't replacing my job. This is making me better at my job. So it's connecting the dots between the tech side and the behavioral side, and using design and using design sprints to do that, have influenced our investment focus over the last few years.
Fantastic. You're right, and I love that point around the revolution here is a design revolution. And often when you look backwards about some of the most influential designs, you look back and you go, that just seemed obvious. And ChatGPT just seems like the obvious solution now, because you're exactly right. It's totally accessible. It's within our realms of familiarity. It's following patterns that we might have seen in other products, and how we operate our day to day. We're just having a conversation with something which is artificial instead of human, and like that just brings it to life in such an interesting way. So I love that, and I love the marriage. And I've always been a big fan of the marriage of deep technical and design or behavioral work as well. And I think that's where magic really happens. It's where magic happens with film. It's where magic happens with
Yeah.
all the different creative endeavors, but it's also magic that happens, the magic that happens within organizations as well. So yeah, thank you for that. I'm really interested. We're going to transition. Just final thought here, if that's okay, before
Yeah.
we wrap up, and that is that this Sprint really started to democratize the world of rapid application of design thinking, or lean, or all these other principles, but put it into a structure and a recipe that is accessible for so many people. You can pick up that book, you can read it, you can, if you feel like you can run workshops very quickly. But the running of workshops is always quite difficult for people because of challenges over facilitation. But what I'm seeing now is even more democratization about design sprints, and I'm interested to hear about how to reconcile these two worlds. One world, which is, the great work that your partner Jake has been doing with Miro, for example. I just saw this released, the talk track version of a design sprint, where he talks you through full facilitation essentially of a design sprint, that anyone can just go to that completely freely, free of charge, go ahead and run through a full design sprint, literally by the inventor, which is amazing. Whilst at the same time, I'm kind of interested to hear your view with character, particularly because with that full democratization of design sprints in this method, you could see that might maybe in one view cannibalize essentially an element of what you bring to the table. I'm interested to hear, I've got some views on that, but I'm interested to hear your view on that, whether that's the reality, whether that's designed, and I guess whether you see that the integration of AI with innovation, and perhaps particularly around design sprints, as maybe being an interesting future wave of future democratization of this.
The continued democratization, as you describe it, of the sprint method is very intentional, and the things that we're doing now, that Jake is doing now, are a continuation that goes all the way back to 2012, which was just writing blog posts and writing case studies. There's some case studies from Pocket as an example, the sort of read it later app. That was a GV investment in 2012, and we ran design sprints with them and published case studies. Even before we had really described how to do a design sprint, or even what a design sprint was. But from those days through writing the book, and then through during the COVID pandemic, needing to figure out how to run remote sprints, and that leading inevitably to creating our own templates for Mural and Miro, and creating interactive design sprint guides with Coda, and including now the work that Jake is doing with Miro. It has been our belief that if you can raise the the floor on people's understanding and mastery of the methodology itself, it enables us as investors, but also everybody else who leverages this method, founders, people who are sort of professional facilitators or working, internally at large organizations. It enables all of us to operate at a higher level. So, another way to put it is that, if you have this spectrum of, design sprint stuff, that you need to have in your brain, and down here is all the, what's the next step? How do we do this thing? How do I run the Miro board? And then, up here is all of the, like, what are the ideas? Like, what are the breakthroughs and the insights, and what are we prototyping and testing, and what are we learning? We want to have our brains focused up here. And so our view has always been, if we can raise that floor, we can raise that noise floor on, sort of the bandwidth of the design sprint and of the sprint method more broadly, it's going to enable everybody to just operate at that higher level. And so concretely, what that looks like for us is, we'll have founders who reach out, or founders that we sometimes get in touch with, and they have already run design sprints. They're already using the process, which helps us earn access. It helps us, sort of begin that discussion, that relationship with them on a very, very strong foot. And so, I think we have not done much work on sort of that next step, which, as you posited, perhaps is the integration of AI into running design sprints. But I think it's inevitable that, as with all sorts of knowledge work, that AI will play a role in facilitation and the leading of sprints. And I think it'll just be yet another example of how we can up level the work that everybody is doing, and sort of clear some of that headspace and clear some of that bandwidth to focus on the parts of the method that are the most impactful, that make the biggest difference for what we're ultimately trying to achieve with that particular project or company or organization.
Amazing, thank you. I initially and flippantly mentioned, in response to seeing that stuff with Miro, that putting all newly qualified design sprint facilitators out of business already. But I think you're absolutely right, and this was my optimistic view, and the belief that I have is that what it means is that everyone has leverage, everyone moves up, everyone, the role of a facilitator might change, because the instruction might be AI driven, but actually you can add value in a different way. You can talk about the experiences that you've had. You can bring that to life in a much more interesting way. It means that people are more familiar maybe with the process, so therefore you don't have to go through those initial harder yards to kind of set the context and the why. You can actually fast track things in a much more effective and efficient kind of way as well. So I am with you. It's fantastic to hear your view. Thankfully, we're very aligned on that side of things as well. Hey, John, thank you so much. We are at time. I know we should definitely be wrapping things up. I want to leave people with some information about where they can find you. So where's the best place to find out more about you, about Character? Where would you want people to be going to after this, and where the links that I can put in the bottom in the description of the videos as well?
The best way to learn more about Character is at our website, character.vc. The best way to learn more about the sprint method is at thesprintbook.com. And the best ways to keep up with everything that we're doing is by subscribing to our newsletter at thesprintbook.com, or following Jake and or me on LinkedIn. So that's what I'd recommend for anybody who's interested in diving in more deeply.
Perfect, John. Final thing, is there anything that we've not been able to talk about that you wanted the opportunity to talk to this audience about, or have we pretty much covered everything that you were hoping for?
I think we've covered it. We've covered enough ground. There's a lot more we could talk about, but we'll save that for next time.
Hey, let's do a round two some other time. Yeah. I have one final question, and that is, are you US only, or are you looking, are there remote opportunities to engage with Character as well? I ask that semi-selfishly, truth be told. Let's leave that for another conversation. But US only, or are you broadening out across other territories as well?
At the moment, we are only investing in U.S. Entities, so U.S. legal
Got it.
entities. However, it's quite common, particularly in Europe, it's quite common for startups to have a U.S. entity and a European or UK entity. And so, I think we have two or three of our portfolio companies are physically located in Europe or in the UK, but they're U.S. legal entities. So that's sort of a wonky and nuanced legal answer, but mostly the
Very good.
U.S. with some
Yeah.
exceptions. Yeah.
Got it. Got it. Got it. No, good to know. Well, look, John, thank you so much for your time today. Thank you actually for many years of generosity with your content, of bringing these frameworks, these concepts, these recipes to life in such a way that they are accessible for so many people now. You've genuinely changed the game for so many people, so many organizations. But the amount of people that I work with and have worked with over the last 5, 6, 7, 8 years that are indebted to you and Sprint, particularly for their living right now, is huge. So I want to say on behalf of all the fellow facilitators, workshoppers, all the people that are, going through those hard yards of helping people to solve big challenges, massive thank you. But thank you particularly for this time as well. It's been amazing.
Yeah, it's been a pleasure. And thank you, Spencer.